Now let's head straight to the fixed income market. Now the overnight lending rate contracted by 133 basis points to 5% following the inflow from open market operation maturities to the tune of 38.08 billion naira. Activities in the Treasury bill secondary market were mixed, however, with a bullish bias as the average yield paired by 1 basis point to 3.7%. Across the curve, the average yield was flat at the short and mid segment but contracted at the long end due to demand for the 261 debt to maturity, which was down by 11 basis point bill. Elsewhere, the average yield was flat at 4.1% in the open market operation segment. Meanwhile, the treasury bond secondary market was also mixed, but with bullish bias as the average yield contracted slightly by 2 basis points to 11.1%. Across the benchmark curve, the average yield dipped at the short and long ends. Let's bring in our analyst now. Mr. John Kanayo is head researcher at Imperial Asset Limited. He joins us via the telephone now. Thank you, Mr. Kanayo, for your time. We appreciate your time. So let's begin from the interbank segment of the market. The overnight lending rate contracted by around 133 basis points to 5.0% following the inflow from the open market operation maturities to the tune of 38.08 billion naira. What more do we know about the activities in the interbank market on Tuesday?
Yeah, thank you for having me once again, Frank. Like you said, the overnight rate dropped by 133 basis points to 5%, obviously because of liquidity inflow from matured OMO bills. We saw liquidity the previous day, talking about Monday, at 165.47 billion. It increased to 259.98 billion on Tuesday. What happened here is that the increase in liquidity brought about the decline in overnight lending rates. Across if you move away from this market, you go to automobile, like you read out while you were doing a brief intro to the market. Automobile market was largely quiet yesterday, though a bit of demand came in for February 23 maturity. We saw demand there with yield declined by a basis point, but overall average yield was unchanged, settling at 3.93%. You move away from here, you move away from this, go to NTB secondary market. At the NTB secondary market, it was marginally up. We saw demand filtering into 26 January 2023 maturity. Yield there was down by 11 basis points. Like you said, short end of the curve was unchanged. Mid end was unchanged. At the long end, we saw a little bit decline in yield position. That resulted to an average yield across board dropping by 1 basis point.
Okay, let me ask you, for those who are watching, who would want to understand how to invest in this market, how can they come in? And you mentioned different, we have different segments of the market. In totality, you talk about the open markets operation. You also talk about the treasury bill market and, of course, the bond market as well. Can an individual investor trade in these? And if not, why?
Okay, thank you for this question. NCB on Nigerian treasury bills and sovereign bond largely fixed income investment. They are associated with low risk low risk profile, meaning that as at the time, an investor that is adverse to risk can look into this market. Good enough, the market has provided retail activities, meaning that you can buy and at any time you want to sell in, as much as there are willing buyers that can be taken over from you. Why we said the largely fixed income, NTB not as much as doesn't have this fixed income return identity as such. But at the point of you entering or an investor coming into this market, you know what the yields are seeing, you know what the price is, and what you expected to get at the end of the period. We often said that if head to maturity, despite the interest that you're going to receive within the period of holding, if head to maturity, you receive your full investment back. If you a good example, you look at the bond market. Most of the maturity we have in the bond market comes with coupon, or what we coupon that's in the bond balance. This is synonymous to what we know as dividend in the equity market. Each of the period that one is expected to get the coupon, you get the coupon at the end of the period. If that investment is held to maturity, you get your investment, your principal back. But if
let me quickly come in. Let me quickly come in.
Okay.
Permit me.
Yes,
you know, there is money market, isn't it? There is, yes.
Okay.
There is
Okay.
bond market, isn't it?
There's bond market, there's NTB market.
Yeah, and there is treasury bill market.
Yes, sir.
Right. So the question really is that, can individual, maybe a man in the street with as low as 20 to 50,000 naira, trade at the retail segment of this market? Because you said there's also a retail aspect of it.
Yes, that's true. An individual with a little amount of money can trade in the retail section of this market. What such individual needs to do is to approach the dealing houses, or approach a dealing house. There is arrangement in dealing house. We have fund put together with 50,000. One might not be able to. So okay, it's not like stock. You now say, okay, 50,000. I'm going to buy a stock like Dangote sugar. But if you approach the dealing house, what they do, they have a pool whereby they aggregate fund, and at the point of you coming in, I think there's an agreement what you will get based on what you are bringing into the market. Then let me just move back to the question you asked. You asked, yes, there's money market, NTV, there's bond. Money market is essentially for bank discount houses. That give definition of state of liquidity and what happened across NTB and bond market. If you look at money market is short-term platform whereby funds are sourced. It's just overnight, current.
Within the banks, isn't it?
Within the banks. When liquidity is high, what really happens? When liquidity is high, what really happens? You see a situation whereby core rates will be dropping, and when liquidity is low, you see a situation where core rates or overnight rates will go up. That reminds me, we have not talked about bond. Secondary bond market. I don't know if I have time or if you.
Now, we will, of course, we have we'll have a lot of time next time to discuss about that. But it's something that a lot of people may be interested in. So, in the course of this program, we'll be discussing them subsequently. But let's look at the activities today. Yes, a lot of investors are expecting what the CBN is going to do for this month at the NPC meeting. And of course, inflation figures are due for release this weekend. What is the activities like? I mean, how are investors preparing for some of these numbers to make their decision? Let's quickly wrap up with that.
Thank you, thank you. Just a quick one. I will quickly do this before I jump into the. There will be an NTB auction this morning. 127.47 billion is expected across the three major maturities. 364 days or 1 year. Paper is expected to carry 122.5 billion. 182 days or 6 months is expected to carry 3.3 billion. 191 days or 3 months is expected to come with 1.9 billion. Like what happened a fortnight ago, we expect the short and mid end of these papers to remain same, while the longer one, the 1 year, is expected to, in line with what CBN did a fortnight ago, to increase marginally. Like you said, inflation figure is expected by this weekend. Like I pointed out here, inflation number and bond are inversely related. Whenever this is coming and a market has the understanding that there is pressure in the economy and number will likely go up, we usually see caution. Across board, investors are apprehensive because when it comes, what it does to the market, or when inflation figure is out and the number increase, either marginally or
so in a nutshell, you are saying that they are already anticipating that once the numbers are released, it's likely to go up, and so they are being cautious.
Yes, cautious trading, especially you look at across board, you look at where yield is low. That's why if you look at NTV, you look at Omo, we usually see quiet trading over this across these markets.
Okay, I think we'll have to leave it there for today. Thank you, John Kana is head researcher at Imperial Asset Limited. Thank you for your time on Business Breakfast.
Thank you for having me.